As cattle producers take in the prospect of $3 calves this year, many are getting the itch to rebuild their herds. But many recall the market highs in 2014, followed by the rapid expansion of the U.S. cattle herd that bottomed out the market. So, what is in store for this year?
You know, if I look through the fourth quarter of the year and into early 2024, I would put a range around where these higher quality bred heifers have traded here through the central northern plains region of the U.S., the West, a full range of about 2,400 to 3,000. And I would say the bulk of them averaged in here 25, 26, 2,700. My guess is that price level is going to continue to move higher as we push forward. I mean, relatively speaking, with calf prices at the levels they are, the value of a bred heifer is historically on the low end of the range of what you would see from a ratio standpoint. So I think they'll move higher.
As for expansion of the cattle herd, drought is obviously a factor, but interest rates are also an inhibitor.
10% interest is holding people back. It's a big deal. If you got a $3,000 bred heifer and you got 10% interest and you're borrowing that money, that's a big coupon that you're behind right out of the box. So that's going to slow the rate of we won't see a herd expansion, in my opinion, of anywhere near the swiftness of what we saw in 2014 and 2015. And quite frankly, I do believe that's one of the big obstacles for many producers. They remember how fast this market came off those highs from 15 and 16. I mean, if you expanded to 15, by the fall of 16, those cattle were worth half as much.
Higher interest rates and rising input costs will continue to impact herd rebuilding and producers' bottom lines for the months ahead.